Hello, everyone, and thank you all for joining us this afternoon. Of course, I am your commissioner, Lorraine Cochran-Johnson, and I want to thank you for joining us for our town hall that looks at property tax and millage rates here in DeKalb. This evening, we are going to discuss a few key elements. Of course, I decided to host this town hall after receiving several emails and calls from constituents who inquired as to how is their tax liability determined. So this evening we'll be discussing and helping you to understand your tax assessment. We also want you to understand the appeals process. We want you to understand our e-host program here in DeKalb and the role that it plays in your tax liability. We'll discuss the homestead exemption and how it affects your tax liability. We'll also discuss the millage rate and how it is determined. We'll talk about how county property tax liability is determined, and also the role that your property value actually plays in that assessment and the number that you owe. We'll talk about tax dollars and how they're used. And where does this money go? And last but not least, we'll also discuss tax breaks for seniors, veterans, as well as disabled residents. Here in DeKalb County, of course, as you see, increases in property values. We want people to understand that we are here to work with you when possible, because we want to ensure that everyone in DeKalb keeps their home. Of course, you know me, but this evening I have three wonderful gentlemen who are sitting on panel with me. And now at this time, we'll go into those introductions. The first person that will be joining us this evening is Mr. Calvin Hicks Jr. He is the Chief Appraiser for the DeKalb County Board of Tax Assessors. And as Chief Appraiser, Mr. Hicks oversees the training and development of appraiser and clerical support staff in completing ad valorem appraisals in the county. He ensures such appraisals and assessments are performed in accordance with state, county, and departmental requirements. And he was appointed Chief Appraiser by the Board of Tax Assessors in November of 2009. Prior to joining DeKalb County, he spent more than 25 years serving in similar capacities in Augusta, Richmond, in Baldwin, Macon-Bibb, and Monroe counties. He is active in the community, and Mr. Hicks is a member of the Georgia Association of Assessors Officials and has received the Georgia Certified Appraiser designation. He's also a member of the International Association of Assessing Officials and received the Residential Evaluation Specialist and Certified Assessment Evaluator designation. He's president currently of the GAAO from 1993 and 94, and also is an executive board member of the IAAO. And was such in 1998. He is licensed in Georgia as a certified general appraisal and a real estate broker. Thank you so much, Mr. Hicks. We appreciate your presence here this evening. Yep. The next panel member that we have with us this evening is Mr. Irvin Johnson. Irvin is in his second term as the tax commissioner in DeKalb County, Georgia. Mr. Johnson began his career with the tax office in July 2000 as a network coordinator, and under the leadership of Tom Scott, who is now deceased, and his successor, Claudia Lawson, who's now retired. Mr. Johnson held several positions within the tax office, including supervisor and manager level positions. He was appointed Chief Deputy Tax Commissioner in 2007. And he succeeded Ms. Claudia Lawson as tax commissioner in 2016. He was elected later that year to his first four-year term as the current tax commissioner. He's a proud graduate of Slippery Rock University in Pennsylvania, where he earned his BS degree in liberal arts and a Master of Education degree. He's the past president of the South DeKalb Rotary Club, and a former member of the board of directors at Mount Moriah Baptist Church in Tucker, Georgia. He was born in Augusta, Georgia, and lived there until his parents migrated to New York. He is a 38-year member of Omega Psi Phi Fraternity Incorporated, the Kappa Alpha Alpha chapter here in Decatur, and he has 2 adult children. Thank you so much for taking your time out this evening, Mr. Johnson, to join us.
Glad to be here. Glad to be here.
And last but not least, we have Mr. TJ Stigler. Mr. Stigler is the director of DeKalb County's Office of Management and Budget. Part of his role, Mr. Stigler served as a policy analyst for the DeKalb County Board of Commissioners and a fiscal analyst at the Carl Vinson Institute. Of course, I will say that most elected officials go through training at Carl Vinson Institute, and it is located on the campus of the University of Georgia. In addition, he has also held positions as both a senior budget and fiscal analyst and senior policy analyst for DeKalb County, Georgia. Mr. Stigler is a graduate of the University of Alabama, where he earned a BA in political science, as well as a graduate of the University of Georgia, where he earned his master's in public administration. He currently lives in DeKalb County with his wife, Elizabeth, and their 2 children. Thank you so much, Mr. Stigler, for joining us.
Thank you, Commissioner.
Now, as we go into the conversation, I'm going to set the tone a little because, of course, throughout DeKalb County, earlier today, I was on a separate panel and we discussed issues that are associated with housing. We are seeing increases in our property values, and this is good, but it does have consequences. So these are just a few facts about DeKalb as it relates to currently the housing market as well as the rental market. So most people have seen anywhere from a 19 to 21% increase in the value of their property over the course of the past 12 months. So to kick off the conversation as it relates to the establishment of millage, we're going to begin this evening with our chief appraiser. We're going to begin with Mr. Calvin Hicks. And I want you to talk to those who are joining us this evening, Mr. Hicks, and explain to them, how do we determine assessed values for properties? And also, how are these appraisals conducted? Also, I would ask in the course of your conversation that you share resources, because your office has a lot of resources and vignettes that are designed to help constituents and residents understand the taxation process and their assessed value.
Thank you, Commissioner. Essentially, the process of valuing properties for ad valorem taxation is controlled in great part by state statute from the standpoint of determining the fair market value. And essentially, that's just what are willing parties willing to pay for property, to acquire property, a willing seller and a willing buyer, both acting in what they consider to be their best interest. So from the standpoint of valuing properties, what we are most concerned as appraisers with what activity is occurring in the marketplace. Appraisers essentially don't set values from the perspective of they are a party in the marketplace. They're more in line with observers in terms of looking at what activities are taking place. And as your opening comments referenced, this past year has been one in which considerable appreciation occurred. Often we would say in past years that appreciation was a good thing of real estate. It always went up. Well, in my lifetime, in 2009, 2010, we had an instance where values didn't necessarily appreciate. As a matter of fact, there was a dramatic decline in values. And that brought many cries from property owners as well, as they saw that their values simply evaporated overnight. But the Board of Assessors is determined, well, first of all, the Board of Assessors, it's a 5-member board that's appointed by the governing authority. And their primary focus is to determine values, assessments for the ad valorem tax purposes. An assessment is simply a fractional component of 100% value. There's nothing that's strange about that. In Georgia is a fractional assessment state, and many states actually are assessed on 100% of value.
Mhm.
But that's just, you take a fair market value of 100% and you multiply it in most instances by 40%, and you have the assessment. The Board of Assessors employs a professional staff to assist in developing those appraisals from which they set the assessments. The assessments then are what are compiled into the digest and utilized to determine what is going to be the overall tax collections once the mill rates are established. And then that's collected by the tax commissioner's office. So the process essentially, as I stated, is controlled by state statute. We must remain at fair market value. You had a number of citations there. You really don't have the option to say have a board of assessors that, for whatever purpose, decides, well, we're just going to take it upon ourselves to keep our values low.
Mm-hmm.
You can try that, and the state will come in because our values are checked every year. The Georgia Department of Audits will review the values that are set by the various boards of assessors, and if it doesn't meet certain criteria, they will report on that, and the county actually can be cited for that inactivity. So we don't have a choice other than to simply look at the market and reflect whatever the market is doing, whether that's up or down, to reflect that. And that is the primary focus in charge of the Board of Assessors.
And let me say, you raise a very valid point, Mr. Hicks. Between 2008 and 2010, that's when we saw a collapse in the housing market.
Yes.
And in many instances, certain jurisdictions, certain markets were hit far harder than others. And here in DeKalb County, in particular, when you view traditional property values, South and unincorporated DeKalb has lagged behind. But what we're seeing now is a very rapid increase in property values. And there are many things that we can say are triggers of that. Everything from supply chain, a lack of access to materials, a lack of inventory, because of course, during the global pandemic, people were not building.
Yes.
And even beyond that, within communities now, people are not selling. So property values are increasing rapidly. And one thing that I want us to all be aware of, when Mr. Hicks indicates that we're looking at 40% of whatever the fair market value is, that 40%, that number is what's used in the actual assessment itself. So whatever is determined to be fair market, you're assessed on 40% of fair market here in DeKalb County. Now, in terms also, Mr. Hicks, of education to help folk understand, can you tell them about the resources that your office has? Because you have some wonderful vignettes, videos that literally walk folk through the process.
The Board of Assessors Property Appraisal Department has a website, and of course you can access it by simply going to the website of DeKalb County, www.dekalbcountyga.gov, and from that you can select the page for property appraisal. We have several short videos that sort of identify the triad of players in terms of the ad valorem taxation and collection of taxes. They explain who are appraisers. They explain what is this discovery process exactly? How do you determine value? It talks about millage rates and exactly what are millage rates, and it talks about why you collect taxes in the first place. So that it gives you a very good understanding to an individual who has no knowledge of exactly what the ad valorem taxation is, or how does it impact one who owns property or taxable personal property. In addition, the website covers other areas as well. It covers an explanation of exemptions and how you apply for those. It talks about the appeal process as well, and it gives some information about the Board of Assessors in terms of the functions primarily that they do as well. So that's my first recommendation. If you would visit our website and review the various information that is available, I think it is a wealth of information. It also provides the property characteristics specific to one's property. You can go there to look at the values. You can look at the property characteristics, size, age, description of the property, photos of the property. You can look at sales activity and get a feel for what are some of the properties selling for. So it can be of great use to you should you have a question about value or simply wish to appeal and are looking for data resources to assist you in that appeal process. One thing that occurs in real estate with ad valorem taxation, at least, we are required to send you an annual notice. And sometimes that annual notice can provide what I'll refer to as sticker shock. If you're not in the market, you may have no interest in what properties are being sold for or what they are being purchased for. But when you get that assessment notice and you're saying, well, you're thinking about, well, when I bought this property 10 years ago, it cost me X number of dollars, and look at what they're saying it's worth now. You're there 10 years later and have no interest in selling the property. It's only when you desire to sell does it become of interest to you to find out, wait a minute, what is the value of this property? And I've heard it often expressed, well, when you're talking about value for ad valorem purposes, it's not really what I want to sell the property for. It shouldn't be something less than that. Well, if you look at the definition of fair market value that's used, no, it's actually the market value of the property. Because we are dealing with a mass of properties, and sometimes there is this lag between collecting the data, doing the appraisals, and doing the analysis. We may not be at the point of value today. Essentially, my office is concerned with determining value one day out of the year. What was the value of that property on January 1st? If a property did not exist on January 1st, it's not going to be taxed that year. And likewise, if that property is destroyed sometime in the year, you still have a tax liability associated with that because it was in existence on January 1. Now, that is not to say we don't track market activity throughout the year, because we have to compile that data and review it when we are getting ready to appraise the property for the next year. So visit the website. I think it has a wealth of information. Even the assessment notice that one receives has an information. It tells you who your primary contacts are. It does give you the fair market value, the 40% value, whether or not that property is receiving a homestead exemption, and gives you an estimate of what the tax liability may be on that property. Although I issue a caveat with that, many times that tax estimate may not have the benefit of all of the exemptions that one is receiving, if they're receiving both exemptions from the county and a municipality. And of course, the tax liability that we have in DeKalb, and I should say the exemptions, we're dealing with not just one exemption. We're dealing with the constitutional exemption. We're dealing with the value offset exemption or the frozen exemption, and we're dealing with a credit that is developed from the EHOS. So that can become a little complex and perhaps a little confusing.
Thank you. And I know that Mr. Siegler will discuss the e-host and how that all plays, as well as homestead. But there's one question that we've had raised quite a bit here in District 7, is people are seeing communities shift in particularly South and unincorporated DeKalb, and the increase in property values. And of course, south of Memorial Drive in 2021, 51% of all properties that were sold that are currently zoned R100, meaning residential, were not sold to individuals, but to private equity firms, LLCs, private investors, and Wall Street. And in many instances, because they have deep pockets, they are the banking institutions, they are paying above market value. And that's something that the average individual cannot do, because if you seek a home loan, you're going to go through the appraisal process. And of course, a bank, as a general rule, is not going to allow you to borrow more than fair market value. So you're seeing a shift in the ability of individuals to own in the current market. And if so, they are competing with not individuals, but private equity firms. Now, as rates or property values are being assessed, understanding what's happening, share with those who are part of this conversation what happens or in order to assure that fair market value or the assessed value is truly in line with the market and is not skewed by private equity firms.
I think there is a possibility that the market may very well be skewed by that type of investment strategy, because those sellers, in fact, are interested in how do I command the highest value for my property. And as I mentioned earlier, that definition indicates it is the willing parties, willing seller, willing purchaser, and the purchasers have to believe that the value is there. The only compensating factor in that description that you just provided, as it relates to properties that are owned by occupants who are owner occupied, is that investor is going to pay taxes on the full value of that property. That they're not going to get a benefit of a frozen homestead exemption. They're not going to get a constitutional exemption. There's not going to be an e-host credit. That property owner that's sitting there, if in fact they're experiencing the same value increase and it is homesteaded, whatever value that exceeds their base when they receive the frozen homestead exemption is exempted. They pay no taxes on that. Now, the unfortunate thing is that that's a true statement as it relates to county portion of the taxes, but it doesn't cover the school portion of the taxes. In that instance, yes, there will be some increase in tax liability because of that value increase. But the bottom line question, and one has to ask, is this: if those individual property owners are of the desire to sell their properties, what do they desire to command for that property? And in most instances, they go very back to that market that they have perhaps been damning and say, listen, if this is what the properties are selling for, that's what I want for my property. But I do think that the properties that are owner occupied and receive the homestead exemptions get some relief, sort of a circuit breaker in that respect, that whatever that inflationary value increases above their baseline value from the county's portion. So if you look at that, the county has done one heck of a job already in providing them that circuit breaker and saying that you have that relief. Yes, the value can increase, but your tax liability does not.
Understood. And I do appreciate that's a very valid point, because in order to qualify for homestead, it must be your primary residence.
That's correct.
As we have investors that are coming into our community, they're not qualifying for tax breaks. But again, for the average person, the concern is, does that property value affect mine? So I do believe also, Mr. Hicks, because I've mentioned this a few times in committee meetings as we've discussed, housing in the current market, that we have to be extremely cautious particularly in certain communities where we're seeing massive amounts of private equity buyers and purchasers go in. And I'm sorry, I think I may have interrupted you.
That's quite all right. I'll one additional comment.
Mhm.
While you may see those private investors come into a specific area, it's also true that someone had to be willing to sell those properties. So again, I don't think we want a market where we can restrict who is a participant in the market. But I think the willing sellers and the willing purchasers, again, negotiating in what they consider to be their best interest is essentially how the market activity occurs.
Understood. And I know firsthand, because when I saw some of the alarming tactics that I felt were taking place, I had a very long discussion with the legal department, and there is nothing that I can do. You cannot control the ability or the inherent right of a property owner to transfer their property.
Yes.
And the market and or the buyer determines value. So it's unfortunate we're not dealing with each other, so to speak. We are dealing with, in many instances, private equity firms in Wall Street, but that is where your value is being determined in particular instances with home sales. Now I'm going to transition over because there's still a lot to be said. And I want to know also who's going to talk about tonight our exemptions for us. Will that be you, Mr. Johnson?
Yes.
Great. Well, you are next in queue because I want everyone to understand what exemptions are out there. And also, if you will just share, the role of your office in the actual process.
Okay. Good evening, everyone. And my name is Irvin Johnson, and I'm a tax commissioner. I'm going to try to give you a third grade or fourth graders version of the tax process and tax bills. And I have a PowerPoint that I want of about 8 slides that I think would be representative of exemptions and how the tax liability comes together. So if I could go ahead and share that particular screen with you guys, and then I'll walk you through the slides, and you'll be able to see what the exemptions are and get some idea on that process. I might begin by describing that the exemptions themselves are deductions or subtractions to your total tax liability. So when you get a tax bill, and that's when most of you realize that something is about to happen when you get a tax bill. But at that point, the county is ready to start receiving funds, and the time for debating what the value of your property or doing an appeal, those opportunities have passed because they're all driven by certain deadlines during the course of the year. I can piggyback off of what Mr. Hicks was talking about. Most of the taxpayers, not only DeKalb County, but around the state of Georgia, get their annual notice of tax assessment. And for many individuals, they assume that that is the tax bill. But as Mr. Hicks said earlier, the notice of the tax, of the assessment is really your advance notice of what your tax bill may be under certain circumstances. It's the notice of assessment is going to give you your estimated 40% assessment value, and it's going to draw in the previous year's millage rate. That final number that you see on your assessment notice will tell you approximately what your taxes might be for the current year. During the current year, the Board of Commissioners and the school board will decide what the current year's mill rates will be. And so Mr. Hicks noticed that he sends you with the assessed value. And once the county determines what the mill rate will be, that then begins to form the basis of your tax bill. And the tax commissioner's office comes into play not only in helping to formulate those kinds of things, but we also are the ones that where you will get access to the exemptions, which we refer to as deductions in your tax liability. And we have a number of them that you can apply for. Can you see my screen? Can you see my screen?
No, not at this point.
If you just scroll, there we go.
We see
Okay.
it now.
Oh, you see it now? Okay.
Mhm.
All right. Okay. When we talk about homestead exemptions, we're talking about deductions or reductions from your total taxes due. I debated whether I would use an actual tax bill as an illustration, but I thought that would be too complex and complicated to go through. So on the tax bill, you will see several basic additions and subtractions on the tax bill. And if you look closely at that bill, you will see a couple of minus signs as if you're subtracting. If you get exemptions on your tax bill, those would be indicated in the columns that have minus and minus at the top of your tax bill. I'm not going to go through a tax bill because of the complexity of just looking at the bill itself. But we offer ongoing services in your community, homeowner associations, senior citizen centers, and in our 3 offices, where we will actually walk you through understanding the tax bill itself. So I won't take the time to do that tonight. So back to exemptions are the result of statutes created by the state, the counties, the cities, and school boards. And that's what we refer to as your levying authorities. The tax commissioner does not have the authority to charge you a tax. He is simply presenting to you the information on your tax bill. All of those exemptions that we're going to talk about are administered by our office. And so you come to the tax office to apply. And over the last few years, we have automated a lot of the application process. So you don't necessarily have to come to the office in person. You can do it online at our website, which is DeKalbTax.org. So we have made it, facilitated the process of applying for exemptions so that you can do it from the comfort of your living room or from your patio or from your breakfast nook. That you can go on to this website at DeKalbTax.org /property tax, and you could go and look at homestead exemptions, and you could get an understanding of what they are and how to get them. Basically, what we're saying here is that the exemptions have to be applied for by April 1 of each year. Oftentimes, we'll get a question about why April 1. Well, as Mr. Hicks knows, we both have dates that we have to follow statutorily in order to make the rest of the system fall in line. So the dates that we have as options or deadlines, okay, on your assessment notice, you get a 45-day deadline from the date of the mailing of the notice. Those dates are not created by us. Those dates are required for us to perform our statutory functions. So while we may want to change some dates for one reason or another, we legally are not able to change dates. So in the case of homestead exemptions, April 1st is the deadline. Now, if you don't make the April 1 deadline, you still have the opportunity to apply for exemptions all during the year. The significance of the April 1 deadline, if you meet that deadline, then you're eligible for the current year for your exemptions to go into place. If you miss the April 1 deadline of the given year, you still can apply during the year, and your qualifications, if you should qualify, will be effective the following year. Once you qualify for an exemption, you always have it. If you remain at that residence, that's your primary residence, you register your cars in DeKalb County. Now, you can own as many properties as you like. As Mr. Hicks was referring to, the fair market, the marketplace says if you can afford 19 houses, go for it. However, in law, you're only entitled to one primary homestead residence, and that has to be in DeKalb, and you have to register your cars there. So that's one of the requirements. That's for a basic homestead exemption. There are other exemptions which fall into senior and veterans and disabled categories. And all those exemptions, the senior, veterans, disabled, have two components, an age component and an income component. So on this screen, you'll see a listing of some of the homestead types that are available for DeKalb County residents. And there are 10, 11 different ones, but I won't go through each one individually. I'll just highlight the fact that in each one, except for the H1 basic homestead, once you apply for it, you always have it. You don't have to come back and make sure you have it. Some of you may have heard early this year or previous years that Fulton County residents were losing their homesteads because they were required to reapply. There was a news story out there, and that created some consternation among DeKalb residents saying that maybe we were losing our homesteads. Well, that has never been the practice in DeKalb County, to make you reapply for a homestead once you qualify. In DeKalb, if you lose your homestead, it's usually because of you moved from the resident, you are no longer, your cars are no longer registered in DeKalb, you converted your property to a rental property and bought another property either in DeKalb or out of DeKalb. So those would be the reasons why you would lose a homestead. In DeKalb, if unfortunately you were to pass away during the course of a tax year, you would still have the exemption in the year of your death. Because as Mr. Hicks indicated earlier, January 1 is a significant date for us in terms of transfer of ownership or when a particular property comes into existence. So on this page, you'll see a number of the types of homestead exemptions that are available, along with indicating some income limits. Now, what I want to call your attention to is that those limits are statutorily set. That's neither Mr. Hicks nor myself, nor the Board of Commissioners saying what those numbers are at this point. That's generally what we have to work with. And generally those numbers represent, a limit or a maximum of what can be applied towards the exemption. Now, you may say to us that they're very low, and we may not argue that point with you, but nonetheless, we're required to follow those because that's our guideline. And then we also have a couple of other exemptions that talk about disabled vets. And the key part there is the fact that most of the time they will require 100% service-connected disabilities. So as you can see from those two pages, the number of exemptions that we have, it's best to go through those individually and see how you may qualify. So in order for you to qualify, what you would be doing is providing with us all the W-2s, or Social Security and other income information that you normally would use in applying for filing your taxes on a yearly basis. So those would be the documents that would be used to verify incomes. So that takes the, if you will, that takes the discretion out of, on our parts, of determining what your income is or isn't. We use the same documents that you would normally file to the Department of Revenue or to Big Brother, the federal government. So we use those same documents. Okay. There's one other area that most taxpayers probably don't know at all, or have never heard of, and but it's a little known benefit. One of the options for taxpayers or homeowners, if unfortunately someone should pass away during the course of a tax year, you have an opportunity to apply for what's called a year's support. And as the law indicates, what surviving spouse rights to year support is concerned with marriage or death of the spouse and minor children. So there are some regulations that may assist you. And this is a little known benefit that most taxpayers oftentimes fail to take advantage of. The idea behind year support suggests that if you have a two-income family, generally speaking, if one of the income earners were to pass away, you basically have lost 50% of your income. And of course, if your situation is different, where you are the only one, or you have minor kids in the house and you would you pass away, then obviously you would like for your minor kids to be able to stay in that particular property. So this is a benefit that oftentimes goes unused by residents, and I wanted to bring that to your attention, because that sometimes will be very valuable to residents. Over the last few years, we have undertaken a diligent effort to try to talk about homestead exemptions all across DeKalb County. So what I have done is I'm showing you an example of the taxpayers who, once they have learned about the exemptions, once they have applied for the exemptions, and once they have maintained their eligibility, we have seen an increasing number of seniors and veterans benefit from the exemptions that DeKalb offers. And what this chart shows you, that there are indeed people out there who have actually saved money on their taxes, legitimately saved money on their taxes. And as you can see, that number has increased. The red area is the basic homestead. So what that suggests is that we have homeowners, for one reason or another, did not have the basic homestead in place. And the basic homestead simply requires you apply for it. And once you apply for it, you have it. And then the blue indicates those other exemptions, the senior, the disabled, et cetera, where we have found individuals who either did not have the appropriate exemption for their age and income, or we found that they may have qualified for a better exemption because all of us, we hope, will get a year older. I think that should bring a smile to your face. And not only that, but sometimes we have our income that changes during the course of our life. So every year we ask the taxpayers to call in or to stop by to indicate whether anything has changed in their income. And as I said earlier, we have been out over the last 5 years to at least hundreds of places by now, talking about have you applied for your exemption? How old are you? Do you have proof of your income? let's get together and talk about it. And we oftentimes will come to your senior citizen or homeowner with our laptops. And oftentimes we will try to qualify you on the spot. And if we have some income questions, we always can ferret those out later on, so that we'll be able to try to qualify you as best as qualifications permit. So we have been actively trying to educate and inform the citizens, and we have seen the results of that activity, that people are actually lowering their tax rates if they actually apply for the exemptions that are there. And if they stay in communication with us once a year, and that's basically doing January to March. Every January, February, March, we send out reminders about exemptions. We're going to V103, On Common Ground, Tucker Gazette,
Decatur-ish.
DeKalb Z letters, and most notably, we send all this information in your annual tax bill. But it's unfortunate that a number of you have shared with me that when I get mail from the tax commissioner's office, I don't even open it. Well, I think that would be something you want to take a look at, because in that notice, we talk about all the exemptions that we're talking about tonight. And we make you aware of what the qualifications are and what the deadline is for that application. So we look forward to you taking advantage of all the information that we've given you tonight. And we're looking forward to improving that in 2022. And as you can see, even during these last COVID years, we have improved the number of individuals, and that's actually money staying in your pocket that you didn't have to pay out in terms of taxes. All right.
And Mr. Johnson, one question that I have for you. I know that when you file for homestead, it's not required that you file each year, is it?
Once you qualify, you always have it. But you have to make the initial application. The homestead is not automatically applied to your property. Oftentimes, new homeowners will fail to apply for their homestead. In the excitement of purchasing their new home, they forgot that the closing attorney gave them a brochure or a pamphlet, or gave them a notice of some kind, saying, don't forget to apply for your homestead. And then 4 or 5 years later, people come and ask, well, I didn't get my homestead the last 5 years. Well, unfortunately, there is no retroactive application for homestead, but you always can get it from the time that you do apply for it. So we can't go backwards, but we can always fix the problem when we know that it occurs.
Thank you. Thank you for that clarity.
Mm-hmm. All right. And so this slide just gives you some contact information for us. You can email us at proptax, DeKalbCountyGA.gov, phone number 404-298-4000. Motor vehicle and property tax appraisal information is there. So we look forward to hearing from you. And the exemptions are there for the application and for the qualifying. And I don't know if there are other questions that may be in the chat or that we want to address. I'd be glad to answer those.
One of the questions, and I'm trying to multitask here, was how does one apply for the survivor's exemption? And that is done through your office, Mr. Johnson. Is that correct?
Yes, the survivor, you're talking about the year's support?
That's correct.
Right. That would generally can be done through us, and we'll do it in conjunction with the probate court.
Now, also, there's a question I see that just popped up from Ms. Valerie Conkey. what happens when there are two owners on the deed? One is 65 and the other is younger. Do we still qualify for the senior discount? I don't think I don't think so, but I want to hear that from you, Mr. Johnson.
Well, the owners of the property can be, of course, if they meet the age requirement. The decision for them to make is which exemption is best based on the age. If I have two individuals in my home, one is 60 and one is 65, and they're married or they're one household, then the individual that's 65 would be the one that would apply for the exemption, if that in fact would give them the best exemption. If you have two individuals, if one may be veteran and one may be a non-veteran, the advice would be for the veteran to apply for the exemption. The husband and wife are one unit, unless they're falling out with each other. But in our business, the husband and wife are all one unit, and so therefore we look at it based on what is the best exemption for the individuals that as they apply.
Understood. There was also a question here. We had one individual ask if they homeschool their children, are they exempt from the school tax? And no, that's not the case. I know you don't want to hear that, but no. Honestly, to my knowledge, and correct me if I'm wrong, the only way to avoid your school taxes is to age out. Is that correct?
Well, the only way to avoid school tax, of course, is to qualify for the exemptions that allow for the school tax to be exempted, which would be, 65 or 70, and again, age, income, and depending on whether you have a veteran status or not.
And one other good question here. If a person chooses to appeal their assessment, I know the answer, but I want to hear it from you all. Once they've applied, does that exempt them from paying the assessment?
The question kind of confuses me. Let me answer it this way. If you are appealing your tax assessment, that has nothing to do with, you still have to pay your taxes. You have two options if you appeal. You can pay 85% of the bill, or you can pay 100% of the bill. If you pay 100% of the bill and you are successful in your appeal, then you would get a refund. If you pay 85% and are successful, then you may get some kind of refund. Otherwise, you would be paying the other 15%. If you're unsuccessful, you would be paying the balance of the taxes, and you would get an adjusted tax bill and given 30 days in which to pay that adjusted bill. So in either case, if you're appealing, you're going to have to pay something.
Now, I just wanted to hear you make a statement. I think I'm having difficulty here.
Right. Well, the better strategy is, if you're going to appeal your property taxes and you don't know what you could pay, you're more than likely are not going to get away scot-free without paying any taxes. So you're always better to pay something on your tax bill. But we normally look for, you will be billed at 85%, or you can choose to be billed at 100%.
In just a moment, I think the commissioner's Wi-Fi is a little spotty. Just give us 1 second here.
I do apologize. Am I with you all now?
Yeah.
Yeah.
Where's John Metelsky when you need him?
I know, right? I think I won't blame Mr. Metelsky on this one. I'll say it's poor internet connectivity.
Okay.
But I did hear your answer to that question, so that folk understand, even though you may be seeking an exemption, it does not allow you not to pay. Even if you pay only at the 85%, you do need to handle your tax liability.
Right, again, the exemptions are a deduction from the overall tax billing. That has nothing to do with whether you appeal the assessment value of your property.
Absolutely. And in order to get through Mr. Siegler's presentation, I'm not going to delay him, but currently we have 16 open questions, and I will continue to try to make it down this list as we have this discussion. But Mr. Siegler, I'm going to ask you to come off mute because you're going to bring it all home. Right now, you all are going to get the nuts and bolts of government. You're going to understand these designated funds. Again, in DeKalb County, we did not increase, although when you read the newspapers because of state requirements, because we will collect more money this year because of the increase in property values, it literally states that we have an increase, but we do not. Our millage has remained constant. The only reason we're collecting more is because of property values. But Mr. Siegler, I'm going to let you take it away, and let's talk to everyone that's here today so that they understand the whole taxation process.
All right. Thank you, Commissioner. No pressure, right?
None.
So good evening, everyone. My name is TJ Sigler. I'm the director of the county's Office of Management and Budget. I do have somewhat of a lengthy slideshow, but will try to get through it as quickly as possible. And the good news is the tax commissioner, chief appraiser, has already covered some of the slides. And I apologize for any background noise. I have 2 small kids and 2 dogs, so you may be hearing from them. But let me go ahead and share my screen. All right. So I wanted to start my presentation by talking about eHost. And eHost, if you're unfamiliar with it, it's a 1% sales tax. And what the acronym stands for is the Equalized Homestead Option Sales Tax. And that was passed in 2017 by voter referendum in tandem with the SPLOST sales tax that's for capital projects. And the purpose of eHost is the money that's collected through eHost, through the sales tax, is then redirected and provides property tax relief for homestead property owners throughout the county. And when we first, looked at the numbers for eHost, we were projecting over the 6 years that the first eHost runs, that it would provide about $660 million in property tax relief over those 6 years. So that would be the savings to the taxpayers. All right, and so the first year that it was in effect was 2018, and it was actually just in effect for a partial year then. So only 9 months in 2018, but from 2018 through last year, the amount of tax relief provided to homeowners was $454 million. And this next bullet says proposed, but they've been adopted now. So the 2022 millage rates in the eHost credit provide a total of $137 million in property tax relief for homeowners. And so that brings the grand total for through 2022 to $591 million. And so that's with still 15 months left in the eHost program. So I would expect by the end of it, we'd probably be close to $750 million. All right, and the way that this works is the eHost credit applies to 2 of the county millage rates that are levied, and that being the county operations and the hospital millage rates. And the reason those 2 are the ones that it applies to is those are the 2 that are charged countywide, no matter whether, what city you live in or if you live in unincorporated. Every single property owner in the county is levied those 2 millage rates. So in 2022, the credit that's provided for those two millage rates will be 100% for homeowners. And when I say homeowners, I should say any taxpayers that have homestead exemptions on their properties. All right, unlike the tax commissioner, I decided to try to go over the tax bill just a little bit. I won't try to get into every single detail here. But this is a tax bill from last year. It's a property in unincorporated DeKalb. I removed information about the owner and property and all that. But what you'll see is in this top right, it has the appraisal values and the exemption information. So this total appraisal, that's the fair market value that it was appraised at. And then this 40% assessment is the actual assessment that you pay the taxes on. And then the appeal assessment, again, is 0 here because there was no appeal on this property. The exemption code, H1F. H1 is for the basic homestead exemption, and the F stands for the property freeze exemption. And the way the property freeze exemption works is the first year you have the homestead exemption applied, assuming that the freeze was in effect at that time. Your value of your home or the assessment of your home is frozen at that for the purposes of county taxes. And what you'll see here is the base assessment was actually higher than the 40% assessment for the current year. So there is no exemption from the freeze on this property, but if this number were higher, then there would be an exemption provided. So next, coming down here, you'll see that there the math, basically how it works out for the various taxes, and it has taxing authorities, and depending on where you live, everyone will have some county taxes. Everyone will pay school taxes, whether that's to DeKalb County schools or City of Decatur or City of Atlanta, if you're in one of those cities. And then there's some other really fees, not really taxes. They're, for your sanitation services, stormwater, so forth. But this is where it gets a little bit complicated for county taxes, is because we talk about the millage rate all the time, but really it's 7 different millage rates. And what you'll see is the county operations, hospital fund, county bonds, unincorporated bonds, fire, unincorporated tax district, and police services. And then the math, the way it works out is just the taxable assessment times the millage rate. That gives you your gross tax amount. And this next column would remove any of the savings from the property tax freeze or the assessment fees, excuse me. And then this is for the basic homestead exemption, this final column. And then in the blue here, this is the EHOS credit. And you can see here that it's applied to county operations and the hospital fund, and that the net tax due on those 2 lines is 0. So that reduced, the property tax in this case by $810. And I think it's important to remember when you're looking at your tax bill, that these taxes are not all county taxes, or they're not all set by the Board of Commissioners. You have your county taxes. If you're in a city, you'll likely have city taxes, and then your school taxes as well. Okay, I won't spend much time on this because this is about the exemptions, and I think the tax commissioner covered those well. All right, but just kind of the nuts and bolts, kind of some of the terminology that we use. So the millage rate is just another way of another term for the tax rate that's levied for property taxes or ad valorem taxes. And then ad valorem tax is just any tax that's based on the value of a property. And so what a millage rate is it's expressed in mills, which means that 1 mill is equal to $1 that would be taxed for each $1,000 in taxable value for your property. All right, another term that I think maybe the chief appraiser and the tax commissioner might have mentioned is the tax digest. That's just the combined value of all taxable property for different, taxing authorities. We already talked a little bit about, there's the fair market value, and then the assessed value, which you're actually taxed on, is 40% of that. And then when we start working on the digest or looking at the digest to try to set the budget, there's really two different tax digests that we're looking at. One is what we call the gross tax digest. So that's just the 40% value of all taxable properties. And then the other is the net tax digest, which is that amount minus all the exemptions. So typically the net tax digest is significantly smaller than the gross tax digest. Okay, this pie chart just shows the budget for each of the tax funds for 2023. You'll see the big green piece here is the general fund, which is the county operations line item on your tax bill. And so that's for county-wide operations. So it would include, the court system, the sheriff, the jail, any of the administrative offices for the county, and so forth. The next biggest is the police services fund at 17%, followed by fire services at 13%. And then these smaller funds, the designated services fund, that includes parks and recreation, as well as roads and drainage and transportation. That tax may or may not apply if you're in one of the cities. The unincorporated fund actually does not have a millage rate associated with it. All the revenue comes in from other sources, and that provides services for the unincorporated parts of DeKalb. Hospital fund is funding that goes to for indigent care in support of Grady Memorial Hospital. That's the region's safety net hospital. And then this final sliver here is for our, what we call the unincorporated bonds, which that's a bit of a misnomer because it includes anything that was unincorporated at the time the bonds were issued. So for instance, any of the new cities, Dunwoody, Brookhaven, Tucker, Stonecrest, even though they are no longer unincorporated, there's still this tax, this millage rate still applies in those areas. The next screen here, or the next chart, is just taking that same tax fund budget and breaking it down by the different functions. And what you'll see here is the largest is the public safety at 44%, followed by general government at 23%, and then judicial at 16%. So in the public safety here, that would include all of fire as well as all of police, plus, the sheriff, animal control, our emergency management, and so forth. All right, one of the things that we get asked a lot is basically, how do we calculate the millage rates? And this is kind of a simplified way of explaining it, but I think it's best for our purposes. But the first step is to really figure out how much money do we need to generate through the property taxes. And to do that, that's the expenditures that are being budgeted for the year, minus revenue from other sources. And then that will give you basically the amount needed from property taxes. The next step is to take that amount and divide it by whatever tax digest for the taxing authority is. And that gives you what I'm calling the raw property tax rate. So it's a decimal that's usually in several decimal places out. And then what we do from there to get the millage rate is just multiply that raw number by 1,000, since that's what it's a mill is $1 for every $1,000 in value. Right, and this is where I think it really gets confusing for a lot of people is, like I mentioned, there isn't just one millage rate that the county charges. We charge a total of 8 different ones, and some of them have different components to them. And depending on where you live and what services the county provides in your area, you may not pay everything. And also in some cases, if you live in a city, the millage rates, even if you do pay it, you pay at a lesser rate than what the unincorporated area does.
And I just want to hop in right here. I hope everyone at home can see the millage rates, because as you move from left to right, Mr. Siegler, you're absolutely correct. We don't all tax the same. And in DeKalb County, we have 13 different municipalities. So across the top of this chart, you see Atlanta, Avondale, Brookhaven, Chamblee, Clarkston. And if you look along the bottom, it gives you the assessment, the total assessment based upon the categories of assessment that each one of these municipalities are charging. So depending on where you live, you are assessed differently. Because for me, I live in the city of Stonecrest. So I'm taxed at a 19.612% total millage. And I'll let you take it from there, Mr. Siegler.
All right, thank you. Yeah, and just to briefly kind of go through this, the general fund, as I mentioned, those are countywide services. So you see it's the same rate charged across the board for all cities and unincorporated. Fire fund is the same rate across the board, except for Atlanta and Decatur have their own fire departments, so they do not pay into that fund at all. Designated services, I told you that that's for roads and transportation as well as parks. And that's actually broken down into two different pieces because the cities have the option to opt in or out of those services. And for the most part, most cities have opted out, especially of the roads and transportation portion of it, with the exception of Stonecrest and Tucker, because the county still provides those services in those two cities. And then the parks portion, you can see that's only two cities that participate in that, Lithonia and Pine Lake. Hospital fund is just like the general fund, countywide, so it's the same rate across the board. And then just like the designated services fund is broken into two parts, the police services fund is done the same way. So there's what's called the basic services and non-basic services. So basic services would be, your uniform patrol, criminal investigation, just kind of what you would, expect a police officer to do on a day-to-day basis, where the non-basic would be specialized units. It would include our helicopter, so the aerial unit, as well as SWAT team, bomb squad, and so forth. This next one on here is the countywide bonds, and you'll see that there is no rate here, and that's because we retired the debt on that, I believe, 2 years ago. So for the past 2 years, we have not actually levied any millage rate for that fund. And then the unincorporated bonds, I mentioned those earlier. Those apply to both the unincorporated area as well as any of the areas that were unincorporated when the bonds were issued. And so you can see that for Brookhaven and Dunwoody, Stonecrest, Tucker. But it's not shown here, but if you're in a city, but you were unincorporated at the time and you'd been annexed since that time, this millage rate would also still apply to your property. All right. And so lots of times when we talk about the millage rate, we're talking about the unincorporated millage rate. So that's the total of all the millage rates that the county levies in the unincorporated area. And that's remained flat, I believe, since 2015 at 20.81 mils. But what does happen, not every year, but some years, is there's some shifting between those various millage rates. So if you're in a city, you might see your total millage rate go up or down slightly. In pretty much all cases, it's a very small change. But if you do see that, this went up or that went down, that is all based on, what we're budgeting for those, specific services for that year, and then the total tax digest for that year. All right, and then this is just showing the annual change in the tax digest. And so these blue bars are the gross tax digest, and the green are the net tax digest. You'll see that from 2015, kind of the average for the gross has been about 9% growth, and the average for the net has been 7.6. But in 2022, we had it outpaced that by quite a bit. So it was 14.6 for the gross, but only 10.4 for the net. And a lot of that is due to the property tax or the assessment freeze. So even as homes were reassessed their values, that exemption kicked in, and that reduced the property tax bill based on that exemption, the frozen values. And my final slide just gives you a link to the budget office website, where really we have an extensive list of different, documents and reports that you can look at. If you don't have the link, if you just go to the DeKalb County website and you go to departments and you find budget, that'll get you there as well. And then this is my name and contact information. So if there are any other questions that we didn't cover tonight, or that you ever have, feel free to email me there.
Thank you so much. I'm busy typing because there was a question here from one of those that's joining us, Miss Jones, and she asked, since property values increase, why didn't our millage decrease? Looks like the county is getting much more revenue based on much increased property values. And I was just explaining, Mr. Siegler, and you may want to jump in. Was an option to roll back, but for us, we have to consider the big picture, because I'm not sure we gave enough conversation to the role that eHost plays in your property values. Can you tell everyone that is a part of the conversation, Mr. Siegler, how much eHost offsets current property tax liability in DeKalb County?
Yeah, so that amount, the dollar amount for this year is $137 million. And in terms of the millage, that's for the general fund and the hospital fund. And I can't remember that exact number off the top of my head, but it's, I believe 9.6, somewhere in 9.6 to 10 mils. And so that's nearly half of the millage rate if you live in the unincorporated area that is, wiped out basically by the eHost credit.
Absolutely. Now, as elected officials, we have to make decisions based on the future. There's a lot of uncertainty out there. Right now, we're seeing the increase in property values, but just today, I was a part of a town hall, a national town hall, and you may be beginning to see articles and discussions concerning foreclosures. Because for a long time, even here in DeKalb, we have had a moratorium against evictions, and foreclosures have not been going through the legal system. So what we see today may not be the future. And also, Mr. Siegler, another major reason why we did not do a rollback is because currently with that $137 million that Mr. Siegler just talked about, our eHost actually expires, is it March of 2024?
Yes, that's correct.
So the reason we didn't do a rollback is because in order to continue that offset for the 2024 year, if we collect these taxes now, we can let them sit in incubation so that you don't see in 2024 a rise in your tax liability, because we were not able to offset the eHost that you've been receiving, because technically it ends in March. But with us collecting these monies, it allows us to, our plan is to save it as rainy day funds so that in 2024, you don't see an increase in your property values because we're no longer able to meet eHost. So eHost, although it ends in March, it will not go to referendum until November. And with that referendum, it will set us up, as long as it should pass, for the 2025 year. So I hope that helps you understand. For us, we had to think about a lot more than doing a rollback, because we're not sure what tomorrow may bring in many instances. And Allison, if you will help us, we have 6 minutes left and I want to answer as many questions as I can. I see here from Ms. Jones, my current situation is that I cannot afford the increased taxes as a retired person younger than 70 years old. When your taxes increase and you are a senior, I would ask you, Mr. Johnson, is it age 65 where the individual can request that their taxes are for, I think the word we use here is frozen, so that it does not increase their tax liability and keeps it consistent for the individual, until which time that property should transfer ownership? And Mr. Johnson, you are on mute.
There's no freezing of taxes per se. The individual has to have the age and income requirements in order to be exempted from school taxes.
Exempted.
And so, yeah, unless that's changed legislatively, those are the criteria for which you can be exempted from school taxes.
Understood. But I do know, and this is something that we've had this conversation about previously, and I want to be politically correct in the term, but if an individual receives their tax bill and they are a senior and that tax liability has increased and it's based upon property value, is there not a way here in DeKalb County that that individual can have their tax liability held in place through your office?
Not that I'm aware of.
Okay, so there's no, and I just want to make sure I understand when we talk about exemptions, I thought it was my understanding that if that individual can demonstrate that their income has not changed, that the tax liability would remain the same until which time that property transferred ownership.
If I may, Commissioner, I believe what you're referring to is the value offset exemption is what it's called in some places. We refer to as the assessment freeze.
Right.
So,
I know that. Okay.
and so that you are correct. There are a few caveats there that applies for county taxes, but it does not apply to your school taxes.
Correct.
So
Now,
Well, you're talking about the base assessment freeze, which if the homeowner doesn't have the base assessment freeze, which which most of them should have, because when the assessment freeze originally came on board, we notified all the taxpayers in DeKalb County, and they opted in or out of it. In the case of the particular individual that you're talking about here, we don't know whether they have it or don't. So what we would have to do is find out the particular individual who we're talking about. Now, there are individuals who did not apply for the freeze and who did not get the freeze. So I don't know if that's the current situation. So it's hard to say what would be done unless we know what we're talking about in particular. But generally speaking, all the citizens of DeKalb County, once the freeze was approved, they received the freeze, and they also got a letter indicating that you had the option to take it. For some reason, there are individuals who did not respond and therefore may not have it, the base freeze on their property. So if the assessments are changing, then they are obviously, then they would be paying the full assessed amount of their taxes.
Now, Mr. Johnson, being as how individuals were given this option for the base freeze, if they did not, because what I found is some people simply don't understand. And I know that in law, they say ignorance is no defense. But my concern is just resolutions and helping people where I can. So if they failed previously to seek the base assessment, and they now desire to do so, where can they go to find out whether or not they have it?
They come to the tax office
Okay, so,
and we pull up their account and we find out whether they have it or not. And then we move forward because they're entitled to have it if they want it.
and with that base assessment, that means that whatever, explain it. I don't want to put words in your mouth because I'm not all knowing. Explain what that does to the base assessment.
Well, the base year, we establish a base year freeze on the tax bill. And then any future taxes, the homeowner would only be paying the difference between what the base year and what the new year would be. For example, if you had a freeze at $100 on your tax bill, that was your freeze amount, and your tax assessment went up such that it would the assessed value would be $110. You would only be paying taxes on the $10 difference rather than on the $110. So
Understood.
there are individuals that again, when the chart that I showed you earlier comes from the efforts that we have made in such forums as this one, and finding out what people have, because neighbors talk to neighbors, but all neighbors are not considered same. The properties are not the same. The incomes are not the same. Their ages are not the same. So therefore, it's hard to generalize about what one has or doesn't have until we look at the specific situation.
Each individual. I understand.
Yeah.
And with that said, I know that we're at the 7:30 hour. I appreciate everyone for joining us because I know we could go on. Allison, let's make sure that our email address is included. We will have answers to all of the questions, Allison, that I see 6 open questions at this point. We will follow up with you all via email. I want to thank you all for joining us this evening. I sincerely hope that this has been helpful in some way. If you have questions, that's why we're here, to answer them. So feel free to reach out to my office. Commissioner Johnson, he has a wonderful staff. You may not always get the answer you want, but I am dedicated, and I believe everyone else here is, to get the answer. So we determine if you've already taken advantage of the base freeze, it will work, because it's to ensure everyone in DeKalb will get in there at where possible and order your offsets to help you. So thank you.
Yeah.
So sorry that I'm having technical difficulties, but thank you all for joining us this evening. And again, feel free to reach out. That's why we're here to assist.
Thank you.
Okay, thank you. And we enjoyed the presentation, and we look forward to hearing from you. And the tax bills are coming out soon.
Thank you all. Have a good evening.
Goodbye.